Thank you very much, Ian. We've got about 20 minutes for questions, which we invite from the audience. Could you come to the microphone and could you tell us who you are before you ask your question?
Rory Robertson, Macquarie Group. Thanks for your talk, Mr Macfarlane. My question is related to the house prices. The big house price falls in the US and the UK have poisoned the banks and the banks in the UK and the US and their economies. My question is, can that happen here? Do you find plausible some of the high-profile forecasts of 30 or 40% falls in house price in Australia, not just in obvious high-end suburbs, but economy-wide falls of house price of the order of 30 or 40%?
Like you, Rory, I think that it is highly unlikely. I think the Australian housing situation is very different, particularly to the US and the UK. Not that we haven't had our problems, but our peak problem really was back in 2003 when we had house prices going up at over 20% and house lending going up at over 20%, and 40% of it for investment housing. So I think we certainly had the makings of a bubble in this country, but for various reasons it was contained. And we've had 5 years of working that out. That doesn't mean there won't be falls, but I think we are in a much better shape. And of course, as well as that, we don't have overbuilding. In fact, a lot of people would say we've got underbuilding of houses. And finally, another factor I think which is quite important when you compare Australia with the US Federal Reserve Board is pushing down the Fed funds rate, but the vast majority, which is the overnight interest rate, but the vast majority of home buyers in the United States borrow long-term, 30-year mortgages, and that rate has not gone down at all. Whereas in Australia, where the vast majority of people borrow variable rate, when the Reserve Bank puts down the overnight cash rate, as you will see from picking up the newspaper, virtually the next day all the major banks lower their variable mortgage rate. So the effects of the Reserve Bank action flows very quickly through the banks to mortgage borrowers, unlike the US, where it gets bottled up in the money market and doesn't actually spread through to the mortgage market.
Do you think, without naming any names, that some of the opaqueness and the complexity of the trillions of dollars of CDO securities that were manufactured and sold on was deliberate in order to conceal the toxicity of the contents?
I don't think that's the biggest problem at the moment. I think the biggest problem is the mispricing of them. I think there are a number of CDOs based on mortgages which are being priced at prices which are way, way below their medium-term recoverable value. I think at the moment that's the biggest single problem in the US. And that's why I was a supporter of the original TARP proposal, which I thought was very sensible, the one that was proposed by Paulson and Bernanke. It only had one weakness, and the weakness was that it took about 2 months before you could get into operation, because you actually had to establish an institution and staff it and all the rest. But I think that's the biggest problem is, the complexity has made the product opaque and people are not able to judge. And so if they're not able to judge, they assume the worst. And they are actually assuming, I think, much, much higher default rates. But certainly much higher default rates than have happened, and almost certainly much higher default rates than will happen.
Thank you. Yes.
Andrew Pease from the Russell Investment Group. It's widely anticipated that the US Fed will lower interest rates to 0% over the next few months. What options do you think the US has for monetary policy going forward?
Very little for monetary policy, but I think my view of the previous situation where something like this occurred, which was in Japan in the 1990s, was that what had to be done, what should have been done in Japan, was for either the fiscal authorities or the monetary authorities to actually buy the sort of instruments which were causing the trouble. In Japan, I thought there was a case for actually buying commercial property. That's not the issue in the US. I think the issue in the US is to buy these sort of instruments which are not trading, where prices have fallen to ridiculously low levels, where the few sales that are occurring are distressed sales, and I think that's what. And I think the US authorities realise that. It's in some sense it's what you buy. Not at this point, it's what you buy, not how low the interest rate is, because we all know once it gets to zero, it can't go any lower.
Dennis O'Neill, New Power Resources. The Australian economy over the last 40 or so years has really thrived also through the development of non-recourse financing in the form of project financing, driven a lot of the mineral sector development and more recently, of course, private infrastructure investment. Non-recourse lending is off-balance sheet. And given the gridlock that is there now, clearly there's a range of project opportunities that are just stuck. And whereas now, with the real economy slowing, is actually, given the lead time for many of these projects, an ideal time to be getting such investment going. That gridlock, do you see it perhaps leading to the unfortunate consequences in 3 or 4 years, perhaps, of a resurgent Chinese economy, putting real orders back into the system for commodities, and finding that the demand side has again outstripped the supply side because these new projects haven't got going?
Well, I mean, that is a possibility. It is a possibility. I mean, throughout this last 3 or 4 years, we've always been worried that we didn't have enough capacity to produce or ports that were efficient enough. Are you really asking me to look through the current problem and try and find out what the next problem is down the track? Which is very, very difficult. I confided to some colleagues here before we came. I'm glad I'm not trying to earn a living as an economic forecaster. I think anyone who's tried to do that, if that was their only source of income, would have gone broke over the last year. I mean, the events of the last year have been quite astonishing. And the capacity to make forecasts of events that are outside the range of previous experience is extremely limited. In fact, as we're almost incapable, biologically incapable of making forecasts of events that are outside the range of our lifetime experience. And I think some of the events in 2008 have certainly been of that nature.
Jessica Irvine from the Sydney Morning Herald. You mentioned in your speech there that there was a lack of curiosity or scepticism among regulators around the world. Do you count Australian regulators as among those? And looking back on things and how things have played out since you departed as Reserve Bank Governor, do you consider yourself lucky to have left when you did?
Well, the answer to the second question is that certainly a lot of people think that, because I've actually had people say to me in the street as they're walking past, "Good timing, mate." And I'd love to take credit. I'd love to be able to say it's because of my superb forecasting ability, but that would not be true. On your first question about where I said that I thought the US, particularly referring to US regulators, had insufficient curiosity and scepticism, I think ours were better. Much better, and I think, I mean, the evidence is there. The evidence is there. I mean, really, truthfully, the Australian banking sector is the best banking sector in the OECD area. So certainly, I think the bank regulation and the banks, we should give the banks some credit. I mean, they didn't fall victim to the urge, other than at a very tiny fringe. They didn't feel the need to prove how clever they were by investing heavily in instruments that they didn't know anything about. So I think it's actually, in Australia's case, probably more credit should go to the banks, but some credit to the regulators.
Georgina Carnegie.
Would you mind commenting, you did briefly, about AIG and the monoline insurers, but in much discussion it has gone into the banking sector and very little discussion has gone into the insurance or even the reinsurance sector. And there is normally an actuarial lag in the insurance sector. And I puzzle as to the fact that AIG seems to be the only insurer in the game and that they didn't flick some of the risk to the reinsurers, particularly the AAA-rated General Re.
Well, My understanding is that that AIG, the faults there were not in their underwriting. It wasn't as though they were underpricing the risk in their ordinary underwriting insurance business. It was that they thought they were so clever that in using the float to invest, which all insurance companies do, that they would go right to the frontier and invest in the most sophisticated end of the market. And so, to the best of my knowledge, other insurance companies have not done that. But that's only to the best of my knowledge. I don't profess to be an expert on the insurance industry. But it wasn't poor insurance that got them into trouble. It was gambling in derivatives markets.
Question over here.
Yes, sir. Mr. Macfarlane, Kai Chow from the Sky News Business Channel. We've seen Alan Greenspan cop a little bit of criticism lately for his supposed role in the current financial crisis. Do you think that it was simply a matter of he was doing what was right for the circumstances at the time and they changed, or is there a point to that?
This gets to be a very complex issue. I mean, you notice one of the things I haven't mentioned was the interest rate environment, because I said I wasn't going to talk about the deep issues. But, I mean, one of the important issues was that during 2002, 2003, 2004, we had a very, very low interest rate structure in OECD countries. We had 0 in Japan, 1% in the US, and 2% in the euro area. Mind you, we did not play that game here. We had, at that time, we had 5.25%, but I'll leave that aside. There's no question that that low interest rate structure encouraged the search for yield, and it meant that there were a lot of gullible people desperate to pick up a few points on their investment, and so it made it much easier for the promoters of these dubious products. But I think you have to go a step behind that and say, why were there low interest rates? Why were there low interest rates in all those three biggest central banks in the world? And that takes you back to a much more complex issue about external imbalances, particularly the massive savings glut, or the excess of savings over investment in other parts of the world, particularly China, which simultaneously pushed down consumer prices and pushed up asset prices as this money flowed into the US market. So I think it's a much more complex story than simply to say interest rates were too low. I think they were. There's no doubt with the benefit of hindsight. But there were some very deep fundamental reasons why they were that low. And the best evidence of that is it wasn't just the interest rates that the central bank set, the Fed funds rate. It was also the real long-term bond rate, which is set by world demand and supply of savings. And that was also extremely low. And of course, that's the one that really, more than anything, drove the US housing market, because their mortgage market is keyed off those long-term rates. Now, I can't say any more at this stage, otherwise it'll take me half an hour.
Thank you. Yes, next question.
Good evening. Ian Richards, a member of Australia's Legion of Badly Bruised Superannuants. According to the published figures, in order to expunge the debt of the United States government, every man, woman and child in the United States would have to contribute $33,000. To put that into an Australian context, while the government and the opposition are arguing about a surplus or a deficit of $1 billion or $2 billion, if we had the same problem as the United States, the figure allowing for currency and population differences would be $1,000 billion. Is the United States capable of recovering from this position? And if so, how will they do it? Or are we witnessing a significant step in the surpassing of the United States as the world leading power, and perhaps the first step towards China becoming the world's leading power?
I'm not familiar with that figure of what every man, woman and child has to contribute, so I can't really... I'm not sure who calculated that, but I think, as a general proposition, most governments in the world at the moment, and I exclude the Icelandic government, most governments actually have a very high capacity to borrow. One of the problems is that it's the private sector that can't borrow. Those with the funds are only too happy to lend to governments. That's why US Treasury bill rates, 0.2% or something, and why US bond rates are so low. So I think there is actually quite a big capacity for governments to run deficits and borrow to cover those deficits. And the other thing I think I would say in the US case is people forget that a lot of this expenditure in the US is actually to buy a very valuable asset. So when they have nationalised AIG, they now own the biggest insurance company in the world. And so at some point they will be able to sell that again, similarly with Fannie and similarly with Freddie. And so I actually think that at the moment there is not a significant fiscal problem. There might ultimately become one, but at the moment, particularly if you take into account the assets that the governments have acquired and look at their net debt position, it's not as bad as the gross figures suggest.
Mr. Macfarlane, David Lucas. Interesting to hear you talk about debt and savings, particularly in the last few questions. Two economic terms which aren't as popularly debated these days are national debt and the current account deficit or surplus. Could you talk about the importance of those two terms in the current economic climate?
Well, I don't think they've been an important consideration, basically. I think in the 80s we were obsessed with the current account deficit and external debt. The general view then was, how could we ever succeed with a big current account deficit and all this external debt? Well, in fact, we did. We actually succeeded remarkably well. One of the major reasons why Australia has a current account deficit, mind you, it's shrunk, by the way, if you've looked at it lately. One of the reasons it does is our national savings rate, not household, national, government, business and household, is about average for most developed countries. But our national investment rate, the amount of the investment we do as a share of GDP, is higher than most countries. So the current account deficit is really, in some sense, a reflection of the fact that we're actually investing, physical investment, plant and equipment, construction, much higher than our savings rate. So it has proved to be relatively sustainable, and I think it will continue to be so.
And the last question, I think, from Carl.
Carl Wolf. I'm a retired professor of geology, not economics. Alan Greenspan just recently said that no economist was able to predict the present global crisis, and you said so much yourself. Now, before I go, I will hand you a list of several books written by economic researchers who actually, up to 10 years ago, kept on maintaining they can predict certain crises. Yeah. Now, where is the contradiction?
Well, I mean, I think the answer is everyone who predicted what's happened this year has been predicting it for 10 years. And getting it right 1 out of 10 does not actually give you enormous credibility. I mean, basically, when we say we can't forecast, I think everyone, probably everyone in this room, knew that after this long expansion, at some point there would be a downturn. And I think I knew, and I'm on the record as saying I thought the trigger would be a financial event, some excess in financial markets. So, am I a genius? No. Are any of us geniuses? No. We're not, unless we can actually tell when it's going to happen and the extent of it. And that's the failure all the time. You could never get the timing right, and you really have great deal of trouble getting the extent. You can get the sort of general picture, you know what the risks are, but to know that there would be a sharp turning point, I think, in the September quarter of this year. I mean, the fall in some of those prices, oil price, shipping prices, commodity price, absolutely astonishing. The fact that the land of the free, the United States government, would end up nationalising the two biggest mortgage lenders, the biggest insurance company, and semi-nationalising a couple. I mean, these things were just... Yeah, I don't know anyone who predicted that. I'd love to see someone who said, oh, look, I think in 2008 this is going to happen. I think you'll be searching for a long time to find that.
Thanks very much.
Thank you.